is Bitcoin has surged from its 24-hour low of 62,500 to its high of 65,100. But wait, here's the question is, are bulls are preparing for another breakout, or is this just a pause before another sharp correction? In today's analysis, we'll decode this chart using moving averages, support and resistance, moving trends, and next key levels. The Federal Reserve has made two important statements that could influence not only US economy but also entire crypto market. Inflation is showing signs of cooling, which is changing expectations for future interest rate decisions. And the Federal Reserve has made it clear that no one is getting a bailout, that is including crypto markets. So what does this all mean for Bitcoin investors? Let's understand clearly. Bitcoin is currently trading at 64,723 after touching a 24-hour high of 65,100 and a 24-hour low of 62,500. Looking at the 15-minute chart, Bitcoin witnessed a strong bullish breakout from the 62,500 support zone, where buyers entered aggressively and pushed the price sharply higher. After reaching the day's high of 65,100, the market experienced some profit booking, but sellers have not been able to force a major decline. Instead, Bitcoin is moving sideways between approximately 64,600 and 64,900, which indicates a healthy consolidation after a strong rally. This type of price action usually shows that bulls are still in control while the market is taking a short pause before its next move. If buyers manage to push the price above the 65,100 with a strong trading volume, Bitcoin could continue its upward momentum and target higher resistance levels as well. However, if the price breaks below the recent consolidation range, we may see a short-term pullback towards the 64,000 to 63,800 around, and also support area before the next direction is confirmed. Overall, the short-term trend remains bullish, but the traders should closely watch both trading volume and key resistance at 65,100 to confirm the next breakout. According to CNBC, the latest inflation data indicates that price pressure in the US economy are gradually easing. Inflation measures how quickly the prices of a goods and services increase. When inflation remains high, the Federal Reserve usually raises interest rates to slow spending and control prices. However, when inflation starts cooling down, the need for aggressive rate hikes also decreases. This is why financial markets are now expecting fewer interest rate increases than before. Lower expectations for rate hikes are generally considered positive for risk assets like Bitcoin because lower borrowing costs encourage investors to put more money into stocks and cryptocurrencies instead of keeping cash in safer investments. Even though inflation is improving, the Federal Reserve will continue to monitor future economic data before making any final decision on interest rates. Now let's move to the second important update. The Federal Reserve Governor Christopher Waller explained that the Federal Reserve does not want to rescue or bail out anyone during financial crisis, including companies operating in the cryptocurrency sector. In simple words, if a crypto exchange lending platform or any crypto business takes excessive risk and faces financial problems, the Federal Reserve does not want taxpayers' money to be used to save those companies. Instead, investors and market participants should be responsible for the risk they choose to take. This statement reinforces the idea that the crypto industry must become stronger through proper risk management rather than depending on government support during difficult times. According to Bitcoin System, Waller also highlighted that he is optimistic about long-term economic growth driven by productivity improvements and technological innovation, including artificial intelligence. He explained that if productivity continues to improve, the economy can grow while keep inflation under control. This means technology and innovation could help create jobs and support economic expansion without causing excessive inflation. When we combine both updates, we get a clear picture of the current market environment. Easing inflation is improving investors' confidence because markets believe the Federal Reserve may become less aggressive with future interest rate decisions. And the Federal Reserve is also making it clear that although it supports a stable financial system, it will not rescue the crypto industry if companies fail due to poor decisions.
That we need are
That
to
you
try to
will
mitigate
not
that.
be bailing out stablecoin and cryptocurrency.
So I don't want to, I can be more broadly than that. We do not want to be in the bailout business, full stop.
But your predecessor did provide a liquidity function for money market funds. If, God forbid, we faced a similar circumstance in the crypto world, would you bail them out?
So I want to be very clear. We're going to do everything we can to mitigate those sorts of extraordinary risks. If and when they were to come in the next 4 years, we want to be in a position.
Depends on strong projects, responsible risk management, and informed investment decisions rather than government interventions. And finally, ending with a short note, and these are two of the most important developments shaping today's crypto market. According to CNBC, cooling inflation is improving market sentiment, while according to Bitcoin System, the Federal Reserve has clearly stated that the crypto industry should not expect bailouts. Both updates are important because they influence investors' confidence and Bitcoin's future decision. Thank you. Bitcoin is currently trading at 64,757, gaining 3.24% over the last 24 hours. During this period, Bitcoin recorded a 24-hour low of 62,500 and climbed to a 24-hour high of 65,100, showing that buyers have been in control throughout most of the trading sessions. Looking at the 15-minute time frame, the market initially moved sideways around the 62,500 to 63,000 zone, where buyers gradually accumulated positions. This accumulation phase was followed by a powerful bullish breakout with large green candles indicating aggressive buying pressure and strong momentum. The breakout pushed Bitcoin above multiple resistance levels before reaching the day's high of 65,100. After touching 65,100, the market entered a healthy consolidation phase instead of experiencing a heavy sell off. This is generally considered a positive sign because strong trends often pause to allow buyers and sellers to rebalance before the next move. The circled area on the chart represents this consolidation where buyers stepped in again after a small pullback and defended the short term support rather than breaking down. Bitcoin resumed trading near the highs, showing that bullish sentiment remains intact. The moving averages are currently giving a positive signal. MA7 64,721 is trading above MA25 64,733 with both averages moving almost together. This suggests that strong short-term momentum while also indicating that the market is consolidating. MA99 64,030 remains well below the current price, confirming that the broader short-term trend is still bullish. When the price stays above all three moving averages, it usually means buyers continue to dominate the market. As long as Bitcoin remains above MA25 and MA99, the overall trend favors the bulls. And the support and resistance, the immediate support is located around 64,600 to 64,700, where buyers have repeatedly defended the price. If this level fails, the next major support lies near 64,000, followed by the strong support zone around 63,800 to 63,500. On the upside, the first resistance remains 65,100, which is today's high. A strong breakout above this level with increasing trading volume could trigger another bullish move towards the 65,500 to 66,000 region. And the here trend analysis is overall the market structure remains bullish. Higher highs and higher lows continue to form after the breakout, while the recent sideways movement appears to be consolidation rather than a reversal. This tells us that the buyers are still in control, although the confirmation through higher trading volume will be important for next breakout. If Bitcoin successfully closes above 65,100, the bullish trend is likely to continue. However, if sellers push the price below the 64,600 with strong volume, a short-term correction towards the 64,000 cannot be ruled out. So finally, that's the latest Bitcoin update. Keep an close eye on the 65,100 resistance and 64,600 support, because these levels could decide Bitcoin's next major move. Thank you.